Hi, I'm Whack.
Hey, and I'm Pat. Thanks for joining us for another episode of the Weekly Orbit, the week ending Friday, November 8th. Whack, there was nothing much going on this week. I was thinking about canceling the
It was a really quiet
podcast.
week.
Real quiet. I don't think we had anything to talk about. But I tried
Yeah,
to put
there's nothing
together
big
an
happened.
agenda,
Yeah.
something we can fill in about 40 minutes worth. So, how's your week been going besides all the other news that happened on Tuesday?
Yeah, I think the election was just the big black hole of attention this week, and all eyes were on what was happening, in across the country and across the USA. And I think over the weekend, but then especially on Tuesday itself and then into Tuesday night, it was just all eyes on what was happening in the polls and back and forth about who's going to win, what the stats were looking like, what the the polling was looking like, but then what was the votes coming in looking like. And the place to be, of course, was the Rocket Pool Discord's politics thread, which actually stayed quite civil throughout the night. Even later on, the people who there's groups, right? People who are more Republican leaning, people more Democrat leaning, people who are on totally other spectrums, not on the Republican Democrat spectrum, and they kept it quite civil even into night when we knew Trump was going to win. A lot of the Republican ones didn't dunk on the Democrats too much, so it was definitely fun. But well, fun in the thing, but then the result, of course, is I think some people found that more fun than others. Let's just say,
Indeed. I'm kind of
yeah,
proud that unlike a lot of other crypto podcasts, Weekly Orbit, we have not talked politics for this year up until
yeah,
we'll talk a little bit
right
about it
now,
today, right?
yeah,
But just an opinion of mine, I get annoyed with some crypto bros who, they're subject matter experts in crypto, and then they think they're masters of the universe and they're experts in everything, and they want to sit there and talk about the intricacies of presidential election politics. And there's other podcasts for that. I want to tune in for the crypto alpha and stuff like that. And it just kind of bothers me that some guys think they know everything about everything. And we're all fallible. We're not experts in everything, and just don't, stay in your lane, basically. I just get annoyed with people like that. But in any event,
yeah.
here we are with markets, and we're, ETH is really rallying. We're at 2,850 as of recording, which is today, this Thursday, November
Can you
7th.
refresh the page? I think we've gone down a little bit.
Yeah, I just refreshed this a few minutes ago, but sure,
Oh,
we'll try
excellent. Okay, maybe we've just gone up again then.
that. Oh, no, it did go down a bit.
Oh, yeah, yeah,
2000,
yeah.
yeah, 2,809. On the week, we're up about 9%. And let's take a look at RPL, see how it's doing. I better refresh this one too. But yeah, $10.15. On the week, we're down about 2%. Over the last 24 hours, about 5%. And then let's take a look at ETF flows. And that was interesting. Yesterday was the first day after the election, and Ethereum had about 52 million in plus in the net. From the beginning of the ETFs, we're still down about 490 million. But we had bounced down to about 470. And then last week, I think we were back up to 550, and now we're back under 500. And
Yeah.
so that's where we are with markets. Do you have any top level thoughts?
Yeah, I think so. Everything rallied this week pretty much. If your coin didn't go up with the election news, then maybe you should think about getting out of that coin. There are a couple that didn't, and I think people are just really cautious about those now because it looks like the market might think they're done. But it seems like any coin with any kind of community or attention or any kind of idea of worth rallied very strongly on Tuesday night, Wednesday morning, and then into Wednesday as well. And ETH broke out of the range that we've been in since August. It hadn't gone up above 2820 in that time. It hit in August. It crashed down from 3,000 plus into the low 2000s, and then it couldn't get back up above over 2820, and that went above that range now. So there's a lot of optimism that ETH is on the verge of a breakout. There's some evidence to show that there's a lot of short interest in ETH, from all those months ago. That's still open, and it might be that as we start climbing, there might be some like short squeezing happening. That helps move upwards potentially, but that's of course speculation. The main thing is that ETH, performed very strongly going into a post-election, and going before the election though it was quite weak against Bitcoin. And it hit new lows pretty much like every day for the last few days before that. But it looks like it's bounced off that low now. And the next thing to see would be, whether we can keep moving upwards against Bitcoin and against the wider crypto market. The thing with ETH is, a lot of the current government's regulatory ire basically focused on ETH and ETH DeFi, as well as centralized exchanges. Those were the two main areas that were getting a lot of negative attention. And most people seem to think now that those actions that the current SEC has started, once we get into the new regime in January, maybe early February-ish, the things that are like at the Wells note stage will get rescinded, so that they'll just go away. And the things that have reached like the court stage, courts normally don't like it when people say, hey, just kidding, let's call this quits. That courts don't like that. So what will end up happening most likely is that courts will say that either reach a settlement, which might be that the new SEC will just say, hey, just kidding, like give us $100,000 slap on the wrist fine or whatever, or maybe even not even that, and then just say, like, let's just part ways. And I think that will be a big win basically for the exchanges. Coinbase, Kraken, those guys are facing a lot of issues from the current SEC. Crypto.com got a Wells notice. Even the Tether investigation that supposedly started last week or a couple of weeks ago, that will go away. So all of this stuff that has been huge regulatory overhang, like huge regulatory worries and headwinds, are all of a sudden going to go away. So I think that the markets starting to price that in, and especially ETH DeFi, some of those DeFi tokens like really pumped big. So Uniswap, Aave, they had huge gains. Lido had big gains as well, from this idea that the regulatory scrutiny that they were going to be under will not exist anymore. The idea now that's kind of coming out is the crypto community as a whole has 4 years, or at least 2 years, but maybe 4 years. That's just because in the midterm elections, if the House and the Senate kind of change, there could be issues about it, but potentially not. But like at least 2 years, maybe 4 years of now the job of the crypto community is to entrench crypto into the worldwide financial system as much as possible, to make it so in 4 years' time, if there's a change in admin, they won't be able to unravel it. That's the idea now. So I think people are kind of taking this as a mission statement. People are taking this as a huge impetus, for the crypto community and all these different projects and protocols to just develop, like get their products out and do as much as they can. A lot of things that we're seeing is like this idea of fee switches now, that are going to potentially be turned on. So there's a lot that's going to impact the markets, and I think that one of the things there's that famous saying, I think it's by Gandhi, like first they ignore you, then they fight you, then you win, kind of thing. I think that we were at the then they fight you stage over the last couple of years with the current SEC, and a lot of people are now saying now crypto's won. So this is a paradigm shift. It's monumental, and it's really funny because the next year could potentially be extremely bullish for crypto, and it kind of lines up with those 4-year cycles. And it's like, is it because it's a 4-year cycle, or is it because of these other things? And it's just the way it just lines up is those 4-year things. So if you're in crypto, I think enjoy the ride potentially coming for the next year. Of course, I'm only talking about this from a crypto perspective. I'm not talking about it from a political perspective, social perspective, any of those kind of things. Just strictly crypto perspective is, the next period is going to be very good. Of course, other people can make arguments that it might not be.
Yeah, I'm going to give you the contrarian steel man here.
Yeah, please go ahead.
And yeah, so there's an old saying that I like to live by as well is in the moment, things are never as good or as bad as you think think it is. And I think in a moment, there's a euphoria amongst crypto guys that, oh my gosh, here it is. This is what we've been waiting for. I'm going to be rich. So on the regulatory front, I agree. It's going to, getting rid of Gary Gensler, getting in people like Hester Pierce in charge of the SEC is a good thing, especially over the short and medium term. But on the economic front, I think it's a different story that you got to be careful of. I think over the last year, we've been predicting that, okay, once inflation is subsided and reaches the 2% goal of the Fed will start with a series of rate cuts. With those rate cuts comes in new money as people on the sidelines start investing and going on the risk curve. We've seen it already in the bond market where the long-term rates, they're jumping up already. And why is that? Well, bond traders are very, very intuitive of future, they like to look into the future, what's going to happen. I think what they're seeing is, if you look back at the prior Trump administration, you had massive tax cuts, which caused massive deficits, which increases interest rates. And the reason is because the U.S. Treasury has to go out and now it's got a bigger supply of Treasury bonds they have to sell. In order to attract buyers, they have to entice them with higher rates. And you're seeing that already. With higher rates, people may be fine with keeping the money on the sidelines because you're earning, Berkshire Hathaway has $325 billion sitting in money market funds, earning 4 or 5%. And so that just as an example, there's that. And then the other thing is President-elect Trump has campaigned on hefty tariffs on European goods, on Chinese goods, on Mexican goods. What do tariffs do? Every economist will agree, tariffs increase prices. And if you have increased prices, that means increased inflation. And what does the Federal Reserve hate? They hate inflation. And so that this idea we've had that, over the next year, we're going to see several rate cuts come into effect, which would be great for, the money printer and getting new flows. But, if inflation starts going up, if interest rates continue to rise, the Fed is not going to, cut rates, which is going to put a damper on the macroeconomic front, which may offset some of the regulatory stuff. Where we have a crypto-friendly regulatory regime, and that's good. And I think that will keep teams in the United States, and people will feel better about building here, and that's a great thing. And it'll probably lead to more crypto adoption. But in terms of prices, yeah, maybe. But I just want to throw that out there because I think folks are overlooking the macro. We've been talking macro for. You turn on any podcast, it's macro the last 18 months. And all of a sudden, we're just going to forget about that. But that's a factor too. So that's my contrarian view. I think that we're going to get some a sugar high, but will it be sustainable? If rates start going up, if the Federal Reserve says, hey, we're not going to cut, we'll see. So that's the other side of the argument.
Yeah, no, I actually agree with a lot of that. And I think the way I'm seeing it is, we might, there's been a lot of talk of recession for the last couple of years, where it's like, the recession's coming, and the Fed so far has been able to avoid, any kind of landing. It looks like, we just kind of like didn't land the plane and we're just taking it off again. The thing is, like you said, there's the sugar high that comes, and with the sugar high, then you have to think, will there be a landing after that? And I think that's the more likely option. And then that again, funnily enough, kind of tags into these 4-year cycles with crypto, is where if the regulatory tailwinds can kind of keep us going for another year, and then the plane crashes, right? Like, for example, then what happens is that will be in line with the 4-year cycles, right? Because you have a huge peak and then a crash and then a slow rise up into the banana zone again. So I think it's just really funny the way that things could line up here. And we're right at the front of it because we're thinking about this every day. And right. I think that having an exit plan for crypto for 2025 is really, really smart to do. I've ridden it up and down now more times than I'm happy with. So I'm definitely, coming up with an exit plan. I had one in place for a while, but it makes sense, I think, to kind of see it like that as well and kind of understand all those different aspects that come into it. But I think the sugar high into a crash is potentially the path that we're going to go forward here. But it's going to be
We'll
really
see.
interesting to see how it goes.
Yes, so we'll see on that. We'll be keeping the tabs. Let's move on to rocket pool stuff. We're looking here at the deposit pool for the last week, and we are into November now. We've had some issues here, whack. We haven't had much coming in. We've had, November 3rd, 4th, and 5th, we had a few hundred ETH come into the pool. November 6th, we had 6 ETH, and November 7th, we've had 22. So this is an issue because if you take a look at this is our Rocket Sweep node set dashboard. We've been stuck now at node set's been stuck at 565 mini pools for the last week, and that's because there's been almost no ETH in the deposit pool. So everything's kind of grinded to a halt in terms of new mini pool creation. And we'll talk about it here in a moment about we need more ETH to come in, but do you have any thoughts? What's causing why do you think it is that we've had such sparse deposits over the last, since Saturn?
Yeah, the answer for the sparse deposits is really easy. The answer is that there's a discount for our ETH on the secondary market right now of around 250 basis points, like a quarter of a percent. And it's fluctuated like right after, like earlier this week, it went almost a 1% discount on the secondary market. And thankfully, we've been able to get back up from there. But we're almost coming back closer to peg. But the fact is that the reason why there's no deposits happening is because people who want our ETH are just buying in the secondary market, basically. So that is why there's no deposits. Now, the bigger question to ask is why is there a discount on the secondary market, right? And that I think at the moment we have a bunch of unknowns about it. Like the fact is a lot of people sold their rETH into the secondary market, which caused a depeg. And I think then what happens is, depeg leads to depeg. People get panicked, they get spooked, even though, the community will kind of be making an effort to say, hey, our ETH is over collateralized, our ETH is not at risk, even if Rocket Pool, the protocol collapses for some reason, unless there's, a Ethereum wide slashing event, then our ETH holders will be made whole. They'll be made whole, right? Because the node operator's ETH is the one that gets slashed first or gets punished first. So they don't have anything to worry about. But I think what happened is that maybe there was a small depeg because, the deposit pool was at zero. So people couldn't sell their ETH that they wanted and get ETH back without going to the secondary market. And then it might have been a cascading effect. That's just a speculation, but it's weirdly, that just happened after the Saturn Zero upgrade. And then, of course, the deposit pool went to zero really quickly. So I'm not sure really what the reason for those people selling their rETH is. The problem now that we have is because there's a discount, obviously there's no ETH that's coming into the deposit pool itself because people are just buying it on the secondary market. So what we need to happen...
Go ahead.
Yeah.
I was going to say, doesn't that create an equilibrium at some point where there is a discount? People see that as that's a good deal, and then we can go over and buy it in that secondary. But at some point, then it should even out, won't it?
Yeah, but like it just like the point of that equilibrium is the thing that we need to kind of, we don't know where it's going to be, right? And we really ideally want a zero discount, zero premium, so our ETH just comes into the deposit pool. But that the fact that we have that discount, it means that people are just going to the secondary market instead of coming into the deposit pool, and that's going to keep happening until that discount goes away. So the way that discount goes away is we need people to buy out of that discount. There's another way that discount goes away as well, is if the discount gets big enough, and then people will exit their validators and use like a reverse Rocket ARB to kind of sell their ETH back into the deposit pool and then burn our ETH that they minted in the flash loan, basically. But that will just stabilize the peg, and it didn't really reach the point where people were happy enough to kind of exit their validators because they don't know when they'll be able to get back in. So it might be a nice boost of income, but it could potentially put you back if you can't get back into staking quickly enough, if that's what your goal is. So those are things that are issues. There is one actually really, really cool mechanism that we talked about a year and a half ago on Weekly Orbit. Just as Atlas, there was some really interesting dynamics with the queue. I don't know if you remember back then, but what happens is the people who are at the front of the queue, people keep joining the queue, right? Right now we have a queue of 270 validators. So the people at the back of that queue feed their ETH to the people at the front of that queue who start staking. Now, because the ETH came from the back of the queue, the people at the back of the queue aren't getting rewards for that. They're just sitting in the queue. But those rewards go to our ETH. And what's happening is the rETH rewards are starting to go up. So this will then incentivize people to mint rETH. And yeah, you can see right here, right? So actually, this is an old one. The newer numbers are showing that the rETH percentage has ticked up a bit more. So the green and yellow line are pointing upwards more, and the effectiveness line is getting closer to 100%. And soon, I think it will go above 100% if more people join the queue. So what will happen then is rETH will become more attractive. The yield for rETH will get higher, and as the yield gets higher, then people will want to mint rETH. They'll do that in the secondary market, and then once that is back to peg, then they'll come back into the deposit pool to do that. So having a queue actually is really healthy for Rocket Pool. Around Atlas time, we had a 2,000 validator queue at one point, but any one validator was getting through that within like 2 or 3 weeks. I think it was a 16-day wait at the highest point on average. So that was giving rETH a huge boost in yield. If we can get to that state again, then that would be amazing. But for that to happen, then we need the queue to get bigger, so then we can feed those validators. And as we feed those validators, the APR goes up. As the APR goes up, more people want rETH, and then that could be that virtuous cycle that we saw around Atlas for those 6 weeks or 2 months, whatever it was, that we had those queues. That's what we need again. And if we can get that going, then that queue mechanism might be enough to feed us through getting all the bonds reduced, and getting a very nice amount of rETH minted. But sadly, it's just taking a little bit of time because the queue is not long enough. It's around 270 validators. If we could get that queue to 1,000 or maybe even 2,000, then the rETH APR would boost up quite nicely. Another thing that's actually really interesting that's going to boost rETH rewards in this rewards period that we're going to talk about later. So I'll leave it for that section later. But yeah, there's a few interesting things that are happening, automatically at the protocol level that should hopefully allow us to get back to peg and minting rETH again. But it might just take a few weeks for that to happen, sadly, like the way it's looking right now. But there's a whole lot going on, in the community and wider to try to get that rETH minting happening. And hopefully we'll see it soon.
Couple of definitions. So when we say depeg, if we're at a discount, now the discount can be a fraction of a percent. So when we say when people start throwing that around, people get scared. It sounds awful, but there's a spectrum of depeg, right? It could be, like you said, 250 basis points. This is 1/4%, or it could be 5%, right? It could be big, or that's rather large. So is there a accepted definition of depeg when we start throwing that around? Because if it's a 0.5%, that it's like, that's getting a little bigger. But if it's under 1%, is it worth saying it's depegged? Because that seems to create some anxiety amongst people sometimes when we throw that word around.
That's kind of what happened. Is there was some anxiety that got created, and some people panicked and sold their rETH, which is what caused the depeg to get bigger. It technically is a depeg, right? The peg is one rETH is around 1.11 ETH. Right now you can buy it for less than that, so it's not at its peg. So the technical term, I totally understand what you're saying. Like, it has these really scary connotations that rETH going to zero or whatever, like we saw with Terra Luna. But
Correct.
It's not that situation, and we have mechanisms now to stop that from happening, right? Like, people exiting validators.
Most LSTs have been trading at a discount for ever. Because when you look at that chart,
very slight discount.
Our ETH would be at a slight premium, and ST ETH and the others, CB ETH, are all at a slight discount. So it seems like, to me, it's like, as long as it's within a acceptable range, if you're a fraction of a percent either way, it's probably okay. It's like when you start getting into whole numbers, I think that is starts to get a little worrisome.
Yeah. So
The second thing on
I
this,
think
but
sorry, I
go
was just
ahead.
going to say I think the market realized that as well, which is why the depeg didn't exacerbate and why people were happy to buy our ETH at a 0.8% discount. Those people are now they've already earned
Yeah,
like multiple months of staking rewards just by buying it at that point. Even if they sold it now, even though it's not technically back to its peg, they've got
sure.
0.5%, right, which is like 2.5 2 months worth of staking rewards.
The second thing on this chart, this is posted, if you're listening at home, this is a chart that Jasper posted, and it's got a couple, it's got on the left side, you have effectiveness. On the right side, you have the APR of our ETH. Now, the effectiveness line has been just going straight up since
Yeah, vertical.
Saturn. It's going, yeah, literally, it's going vertical. We're approaching 100% effectiveness. What does that mean? What, for the casual listener out there, what does it mean, 100% effectiveness? And it's possible to go over 100% quickly.
Yeah. So the effectiveness means, the ETH that is in Rocket Pool, the protocol that people have deposited, how much of that is actually currently being staked and earning rewards. That's what effectiveness means. So if you look on this chart, like on the screen, like it goes back to like May or June, basically, like the end of at some point in May or June is where it starts, and at that point, the ETH in the protocol was 97% effective. That means 97% of the ETH that was in Rocket Pool was earning rewards, earning income, which is good, right?
Mm-hmm.
Sadly, as the months went on, as the deposit pool was full and then overflowing, what ended up happening is because so much ETH was sat in the deposit pool, that was not effective ETH. Like that wasn't being staked, right? It wasn't accruing rewards. So that had a negative impact on how much rewards were coming into the protocol, how much income was coming into the protocol, and what our ETH's reward was. So it was a drain, and at one point it went down to like almost 90%. Sorry, yeah. So that means 10% of the ETH in the protocol was not effective. That means it wasn't earning rewards. So we were taking a 10% hit on our income basically, which was quite drastic. And when it's 3% and you go down to 2.7% because of that, that is the crucial difference between competing against other staking services, and that is not where you want to be. So now what's happened is the deposit pool is empty, right? And there's a rETH overflow bin that is empty as well. So that's 1% of the protocol. So that's got like 5,000 ETH worth of capacity in there. So because both of those are empty or close to empty, you're getting closer and closer to that 100% number. And when you get to 100%, that means all the ETH in the protocol is effective. All of it is being staked. So there's no like waste. It's not really waste, but
Right.
there's no like buffer or anything in place. It's all being staked. So the APR starts to go up. So you get that 10% boost, that we were losing before. That APR goes from then 2.7% back to 3%. Oh, well, just less than 3%, but that's nice, right? Now, how you can get over 100% effectiveness is that queue mechanism that I was just describing before. Because as people are in the queue, their ETH that are in the back of the queue, that's not technically counted as a drag on the protocol, but they are helping validators come online at the front of the queue, and those rewards are then going to the rETH holders. So you can actually get, the longer the queue is, the more effective this can even go above 100%. Like not much by 100%, but like, slowly, the longer the queue is, the more above 100% you go. And then the amazing thing is obviously the higher the rETH rewards will go as well. So yeah, you just brought this tweet on screen here, and we can see that rETH supplies, the rewards for it are getting closer and closer to Lido, which is really cool. Now what's happened actually since this tweet went out is it's gotten even better. So that's really cool to see. But
Right.
it's only a matter of time now before before we overtake Lido, hopefully. It depends on how the longer the queue is, the quicker we can overtake Lido. But the fact is that, we're back in that range of competitiveness now. So if you can get 3% or 2.9%, but then with the 2.9%, you're getting all these other great attributes like, being over collateralized, properly insured, but also more decentralized, more Ethereum aligned, all of those good things. The closer that number is, the more likely people are to pick the slightly less yield. Sadly, the thing that we've learned is that people will almost always go towards the high yield and not really care about other things. So we really need those numbers to be like really close to each other, or hopefully, rETH even getting ahead. And then once that happens, I think we'll start seeing more flows and more, that peg going back to zero, hopefully, and more flows coming in. That's what we want to see.
Right. Yeah. And just looking at this chart, you posted Lido at 2.9. This is earlier in the week,
Yeah.
2.97%. Our ETH is at 2.86%. Lido has a 10% commission. Rocket Pool has a 14%. So all things being equal, Lido should be a little better return on the
Yeah.
APR than Rocket Pool. But as you said, with that you're getting more decentralized, over collateralized. It's good for diversity, of the stake. We talked about that for a long time. Lido was over 30% of all staked, and that's we're approaching unhealthy levels. So anyway, that is a good discussion about APR. If you go to rocketpool.net, it'll publish the current 7-day average. So this was as of last night, 2.86%. Solo staking is just over 3%. I can't remember exactly what it is if you're just a pure solo staking.
It's just above 3%. Yeah.
Yeah, because the 2.86% includes that 14% commission we were talking about.
And that's trending up as well.
Yeah. Yep.
Yeah.
And we've talked about this before with trying to get folks to invest in our ETH. And one of it is DeFi opportunities, and over and over again, PancakeSwap has had the highest yield. If you created a pool with our ETH and ETH on PancakeSwap right now, you'd be earning over almost 22% on your LP, which is phenomenal. And this has been consistent whack over months. PancakeSwap.
Yeah.
The other thing, when I consider these DeFi opportunities, one thing that comes to mind is the Lindy effect. How long has this protocol been around? Because the longer it's been around, you could say generally, the level of safetiness probably goes up. Probably never reaches 100%, but places like Aave, they've been around for a very long time, and they're considered the kind of the gold standard. PancakeSwap's been around a long time too. How long have PancakeSwap been around? Do you know?
Yeah, it really emerged in 2020, 2021, and it actually started its life on Binance Smart Chain. Like that's where PancakeSwap really started. And it came to Ethereum, I think, in 21 or 2022, and it's kind of like a small, in all honesty. Like it's not huge, but it's been going for a while. They have had some issues with pools in the past getting drained, but I think those problems are hopefully behind them now. And like you said, like the rETH yield here is tremendous. Now, the reason why there is rETH yield here, let me make it clear, is that I don't think there's any shenanigans going on, anything like that. The
No.
reason why the rETH yield here is so good is because they are getting fees from the Rocket Pool's incentive management committee are incentivizing this pool, and also PancakeSwap are incentivizing this pool. So you get rewards from both sides. So you're getting an actual farming APR and liquidity providing fee as well. So as people use this to swap between ETH and rETH, then you get some of the fees that come to you, but also you get some incentives from the IMC and from PancakeSwap as well. So those things together is what gives you this yield. Now, as more people come into this pool, then that yield will go down. As the price of RPL goes up, as the price of the PancakeSwap token goes up, that yield will go up. So it's a really interesting balancing act that happens. But the main thing to realize is, I cover the DeFi opportunities every 2 weeks, basically on my show, showing you like what's looking good, what's not looking good. And in the last 6 months, I think PancakeSwap has been number one in like 70, maybe like 85% of times. PancakeSwap is the place to be, where your rewards are really, really excellent. So much so that, like long term, when it comes for me, holding my crypto, like I might just have ETH and rETH and just put them in a liquidity position, put them in Balancer where the IMC also incentivizes, put some in PancakeSwap, kind of spread it out. But those yields are just incredible, because you have to remember that, you're getting a yield on your rETH, but then you're also getting 20% on your, ETH and rETH as a whole combined. It's just astronomical yield like that you
Right.
can earn out there. And I
Yeah.
think sadly people don't know this that much, where you can do this, that there's such good yielding opportunities out there. I think that's a really good like thing that you've actually mentioned just now. I think I should make more of an effort to mention that on Twitter as well, just to get the word out about minting
Yeah.
our ETH and how profitable it
We were
can
just
be.
talking about, solo staking, you get 3%. If
Yep.
you're running a mini pool on Rocket Pool, it's what, maybe 4.5, 5 at the most,
No, for
4.7,
something around the four number, yeah.
4. Right. So you're getting a
Yeah.
little bit of a bump because of the borrowed ETH you're using, but it's 20%. This is, if you're looking at, if you're just hungry for yield, this is it. And however, it's not financial advice. If you did something like this, it might make sense as part of a portfolio. Maybe you have some mini
Hmm.
pools, maybe you have some, an LP and PancakeSwap, and maybe you have some rETH just in your cold wallet, just sitting there earning, say, pretty safe yield. So as
Yep.
a diversifier, this makes sense, and we're trying to encourage folks to, hey, look at rETH, because we've solved. I think we have solved the node operator problem and validator problem on that seesaw that we have at Rocket Pool. The other side of it is people wanting to own rETH. So this is a great opportunity for anybody out there looking to put their ETH and rETH to use.
Yeah, and
Okay.
of course, we should make it very clear that using DeFi is risky, and
Mm-hmm.
you could lose what you put in and all that good
Right.
stuff. Like, just to make it
Do
clear
your own
that,
research.
yeah, do your own research. Just because we're mentioning on the show doesn't mean we're endorsing this, and doesn't
Right.
mean that we are saying that you should put all your money into this, because there is a chance that you could lose everything you put in. So I just wanted to make that clear.
Yep. Uh,
Yeah.
Langer's had a post today. We had talked about Saturn Zero. Saturn Zero was twofold. One, we were going to not require RPL as collateral if you want to spin up a mini pool. The second half of it was getting rid of the 10% cliff, the 10% regarding the RPL collateral. And if you had less than 10% in prior to Saturn Zero, you didn't get any monthly rewards in RPL. That is now gone. But there's a part of it, it's called the reward tree, that is off chain, that has to be put together for this all to work out. And this is a little above my pay grade whack, I'll be honest, in terms of programming and computer science. My understanding, though, is that Patches has been working on this, and Langers here just gave a quick update stating that the TLDR it's going to be delayed. Our next reward period was set for, I can't remember, November 22nd, I want to say.
Something like that.
And or maybe less than that, but it's now going to be delayed till the December reward period because they need a little more time to get this tree together. It's a little disappointing. I would have liked to have seen it in November, but the team wants to make sure they get it right. It's really I just read, I was listening to your show the other day when you were going through the explanation thread that Patches gave, and it just went right over my head because it sounds really complicated. So I'm glad that they're working on it. I wish we could have gotten it sooner, but it sounds like December they're pretty confident they'll be able to figure this out by then. What are your thoughts?
Yeah, so just to be clear, this won't impact the RPL that people will start getting, because that is fine from rewards tree 8 that we are using at the moment. So if you have an existing validator that was not getting RPL rewards before, you will start getting RPL rewards from this current rewards period. So that is totally fine. The main thing that this impacts is the new node operators, or the new validators that started after Saturn Zero. They have, the way that we give them rewards has changed. So it used to be that if you started a validator, you would have 14% commission, and that was locked at the contract. You would always get that 14% commission as a node operator. With Saturn Zero, however, we changed it so you would get 10% if you were just a ETH staker, and up to 14% if you had RPL staked with that as well. The key piece of information was that that wasn't coming all from the contract, right? Like 5% of your commission would come from the contract, and the other 5%, up to 9%, would come from the smoothing pool. Now, that would be calculated, how much you would get would be calculated using a new version of the rewards tree, version 10. That sadly is not going to be ready for this rewards period. So what will happen is people who started new validators after Saturn Zero went live, the new Saturn Zero validators, they won't be getting their full ETH rewards for this period. So next period, however, it will be ready, but this period they won't be getting their full ETH rewards. They'll either be getting half their ETH rewards, or yeah, basically half, or maybe even a little bit less if they have the RPL on the node. They were expecting 14%. They're just going to get 5% this time. Now, I was kind of alluding to this earlier, is that's horrible, sadly, for those node operators. But we had put out some messaging beforehand that there is a chance that the rewards period wouldn't be ready in the first interval, that it might come in the second interval, and that's sadly what's happening now. However, the unintentional benefit of this is that it's giving rETH a boost. So because the rETH rewards, they'll be paying less commission, right? So instead of paying 10% commission, they'll only be paying these people 5% commission. So that will actually give a nice little boost to the rETH yield as well. So these are the kind of things that are happening, and some are short term, some are longer term, some are dynamic, that are going to change the rETH yield. But that is going to have an impact on how much yield is going to rETH holders for the next few weeks.
So just to clarify, if you had existing validators prior to Saturn Zero,
Yeah.
and you were under the 10%, you will now get RPL rewards November. If you spun up a validator after Saturn Zero, you're gonna have to wait until the next reward period, which is hopefully December.
So this isn't for RPL rewards. This is for ETH rewards. So if you have an old validator with RPL, for ETH rewards, so ETH commission.
Got it.
So you will still get your 14% commission if you were on the old contract, legacy contracts. It's just for the Saturn Zero new mini pools. They're the ones who are going to be impacted for this. It's got nothing. It won't impact RPL rewards, and it won't impact legacy mini pools. It's just those that have started after Saturn Zero went live. Those are the ones that are going to be impacted by this, and hopefully it will only be for one rewards period.
Okay, that's cool.
Yeah.
All right, on to our final news. Rocket Pool on Twitter is back. The team has had, as we recall, I think it was back in December of 2023, Rocket Pool account got hacked, and through, I think, Alpha Growth, they were able to contact whoever's left at Twitter and get the Rocket Pool handle back in the hands of the team. So they are back. And this is big because I think Rocket Pool has about 40,000 followers on Twitter, and it's been a missing voice in the Twitterscape, and this will be welcomed because I try to tweet out stuff. Jasper is a tweet machine. I know you do too, but having the Rocket Pool protocol back on I think it's going to be very helpful. I don't know what took so long. It's hard to know behind the scenes what the heck was going on.
I know.
Oh, do you? Okay. You want to tell us?
So the Twitter account got hacked, and the team then tried to regain control of it, and they did regain control of it. However, they got locked out of the account. So that was the status of the account for the last year, pretty much 11 months, whatever it was, is that the team technically had control of the account, but they were also locked out of the account, so they couldn't do anything with it. But thankfully, it was in an unhacked position, so there weren't any new malicious tweets or anything like that coming up. So what ended up happening then is that the team tried to reach out to Twitter over and over again saying, hey, we locked out our account. Can you help us get back into our account? But then they got radio silence from Twitter. And then now with Alpha Growth, who are helping, they've been hired by the GMC to help the protocol. They had an in at Twitter who were then able to unlock the account for the team. So that's what's happened.
Okay, well, that's good. I'm looking forward to seeing some tweets, a daily tweet by the Rocket Pool team every day. Let's move on quickly to wins. I'll go with mine first. I talked to Joe, and Joe he had a couple Proteuses left, and mine just came. This will be my second one. Just came in the mail yesterday, so I'm really happy about that. I was accepted as a node operator, and so I'm looking forward to getting on the test net and getting that spun up.
Nice.
So that's my win for the week. I'm gonna have 2 nodes running here at the weekly orbit. So how about you? What's your win?
That's really cool. Yeah, my win, I think, is kind of a bittersweet win in some ways, but I won't get into that too much. But I think it's just hope coming back into the crypto community and into like the wider crypto space is, Bitcoin just hit new all-time highs in price, up to $76,000. People in Ethereum now are hoping for good things to happen again. So just that hope coming back, I think, is a win. But I'm not paying too much attention to why the hope is back, but just that hope is back. Yeah.
That's good. Yeah. My final thoughts for you Americans out there with the election, it's a lot of folks had anxiety. I would just say just be kind to each other. Politics has become so polarized, and it's hurt families and friendships. And let's just try to tone it down and be kind to each other, and agree to disagree sometimes. But we're all in this together, and unless you're a Nazi, I can get along with you. So let's hope that good things will come, at least in crypto. Hopefully our bags will get a little heavier, but we'll see. I'm always with a contrarian view on things, because I just feel like in my personal life, things never work out exactly the way you think they are, and it's usually somewhere in the middle. So that's why and then if it does work out well, then I'm like pleasantly surprised, and I can be really excited then. But that's just my personality. So anyways, it's been a good show. Thanks for watching and listening. Subscribe, like, Whack. We'll see you next week. Have a great week, everyone. We'll talk to you soon.
Thanks, Pat.
All right.
Bye.
Bye guys.